Hey everyone, Justin Holland here with the Mad Insurance Show, making a difference in insurance. Can't thank you enough for joining us for this week. I'm going to be a solo host today. Actually, going to have a cool guest next week, and we're excited about that coming up. Blanco Bood with Engaged PEO is going to join us, and that should be a fun discussion and talk about PEOs. And if you don't know about that, you might have a business and you want to learn about that, but that'll be next week's guest. Last week's guest, Jeju Ortiz with Scan Health, was just dynamite. He brought some great insight regarding Medicare last week. So if you heard that show or need to go to us online and double check that show, feel free to do so. But again, it's Justin Holland. You're listening to the Mad Insurance Show, making a difference in insurance. I'm with Texas State Insurance Services here out in San Antonio. Got 4 locations around San Antonio, one in McAllen, where we service everything health insurance. You're talking individual health insurance, the Affordable Care Act, health coverage options, dental and vision, travel insurance. We also do employee benefits as well. So if you've got a small or medium or even large business, we'd love to talk to you on that. You can reach us at the office at 210-880-5316, or you can visit us online at txstateinsurance.com. Another division we have is Palmetto Life Group. Palmetto Life Group we created for more life insurance, long-term care planning, Social Security analysis. We also brought on recently auto, home, and umbrella policies as well as commercial. Just so many clients were just saying, "Hey, Justin, can you just take care of all of this for us? You broker it out and look at every option anyway. Let's just uh, parlay this into one bet with you on all the carriers." And it's been a good fit, and it was a long time overdue for us to add those additional benefits there. But if you needed help with the life, long term care, retirement, Social Security, or even the auto, home, and umbrella, as well as commercial, then you can reach us at Palmetto Life Group at 877-357-5316, and or go to palmettolifegroup.com. So that kind of gets the show identification and who you got yapping to you today. And we've got some pretty cool topics to talk about here on insurance. Now, remember, this show is designed on everything insurance. One week we'll talk about health insurance. One week we'll talk about life insurance. One week we'll talk about employee benefits. Some will talk about auto and home, and umbrella policies. Next week we'll talk about PEOs. But this show is going to be basically discussing some of the headlines that we're seeing out here on the industry. And it seems like every week we've got something new that comes up that's affecting health insurance, whether it be Medicare or individual health insurance. It is a sign of the times, I think, where we'll see more disruptions out there. I hate to say that, but you need to make sure you're in tune with your agent broker on all facets of your insurance. Okay. And we'll talk about some of the headlines that we are seeing right now. Let's actually dive into that. So, recent headlines as far as the Medicare space, you're going to see plan reductions or a reduction of benefits and possibly networks tightening on Medicare insurance. And I'm specifically talking about Medicare Advantage. Okay, if you're on a Medicare Advantage plan, if you're on original Medicare and have a supplement, you'll probably not see much of a disruption. Maybe just an increase in your premium this year, like we've been seeing the past couple years across the board on all the carriers. But the news that came out a few days ago rocked the stock market of the health insurance carriers' valuations. Managed care stocks plunged following almost a flat Medicare rate proposal. And the stocks that really took a hit were going to be United Healthcare, CVS Health, among others that took some hits there. I think Humana was one of them. And I'm looking at a Morningstar article here, and it was basically on the fact that managed care stocks tumbled following Trump administration's proposal on Monday evening, to keep Medicare Advantage rates nearly flat into 2027. We're in year 2026. This time of the year, or around this time, the government and what's funding Medicare is evaluated. And they're saying to the carriers, hey, don't expect a bump or an increase in reimbursement for the managed care that you provide your Medicare insureds. And that's really big news. The United Healthcare, the largest Medicare insurer by membership, saw a 20.7% drop in their share prices on Monday, and even Tuesday afternoon. It looks like Humana plummeted 22%. CVS Health fell 13.3%. When you see these type of news articles or headlines out there, you might say, okay, I'm fine with my insurance. It's not going to affect me. It's just the insurance companies are losing some money. Well, when they start losing money or they're not getting what they forecasted on reimbursements, they are going to contract the benefits that they offer on particular plans. They could get out of networks like what we saw, or areas and service areas like we saw last year with a handful of carriers. There can be some disruption there. So I think we need, as far as I'm concerned, as an agent broker, we're really staying on track with this so we can let and get the awareness out there now to our existing clients, these new Medicare eligibles that are basically turning 65 or retiring from their work and going to need to get on Medicare. We need to provide them some expectations. I let my clients know all the time, hey, I'm trying to play the long game here. We try to do our best that we can and be excellent in our service and support. Sometimes we fall short. I mean, this past fourth quarter was probably the most challenging enrollment season my brokerage has ever had. And I'm not afraid to say that. It was tough for everybody. And just know that our brokerage, we're trying to be proactive. We're trying to see what things will look like in the next few years. It's benefited us in the past with that strategy to where we can let our clients know. A lot of times the client will say, "Hey, Justin, I remember you saying that this is probably going to happen," and it did, and it came to fruition. And we can make sure we prepare them for those adjustments because that can affect cost on their Medicare, could affect copays, it could affect a particular doctor or a procedure that they're expecting to have. So that is, you know, that headline on what's happening to these health insurance carriers, I think we're going to see some repercussions of that going into 2027. No doubt. I think some carriers are going to be more prepared than others and some will not. I got an update from Scan Health yesterday on one of their alert emails to the broker agency community, and it's basically gonna say, "Hey," and I just had Scan here last week. We're gonna cut down on some of the spending and the things we do for marketing. Okay, and no problem. They're right off the bat saying, "Hey, the Medicare industry is changing. We need to get and strategically plan for this. We're giving you a heads up. We might stop doing this or this." That's great. I think that was a great, inviting email, of awareness because some of the carriers that we've dealt with, and I'm not gonna name names, will just, 12 hours of midnight, send out a release and we're taken aback, before a hard deadline or when we're expecting one thing for an industry market or an enrollment season and seeing something totally different. So, hats off to Scan Health for sending out that letter from Sash and Jane to the agent broker community and give us a heads up. Hey, this is what we're seeing. This is what we need to prepare for. These are where we're making some changes. So the fact that a carrier right after this news, and I got that email yesterday, and today we're filming and recording the show here on Friday, January 30th. But that was nice to know that we've got some carrier partners that are in this to help us with our clients and our insureds as well, or their clients and the people they insure with their plans. All we do is just help shop it, analyze it, look for holes or for exposure, and then help those clients get into those particular plans. So that is really my concern on how that's going to affect everybody. Is just if you're on Medicare Advantage, expect some changes. And the current administration basically said, "Hey, don't expect anything, to increase." Now, I say that and watch, things, crumble throughout this year. And I mean, I really think health insurance is under fire, especially on the individual markets. Medicare has always been a little volatile over the past few years, and we're showing that. And I don't necessarily see a reset in the health insurance like I thought we would see right now. We're just seeing, hey, we're seeing some subtle changes. Um, some of them have been disruptive, not subtle, but just make sure you're talking to your agent. Don't just wait till the end of the year. Always just make sure you're in tune with what's going on with your plan. What does it look like it's going to help out in the industry or hurt you in the industry? And a good agent broker is going to be able to provide you some value on that. And we'd love to help you with that with Texas State Insurance Services. Again, you're listening to the Mad Insurance Show, making a difference in insurance. My name is Justin Holland with Texas State Insurance Services and Palmetto Life Group. We provide independent advice here locally for everything insurance. And this show that I mentioned before is basically, we talk about insurance every week, and that can be different facets and segments of the industry. And hopefully, you get some value out of today's show. And one thing I need to plug too is our YouTube channel. Don't forget to please go to youtube.com/ at Mad Insurance Show. Please like and follow and possibly share that with everybody. We're slowly but surely gaining some subscribers, just like any new YouTube show or podcast that's out there. So if you remember to do so tonight, while you're listening to the show or watching the recording or one of these small clips, please go to our YouTube channel at youtube.com/ at madinsuranceshow.com. We'd love to have you follow us and keep up to date on all the videos. Something that I thought was going to be important to talk about on today's show is we'll get updates from all the carriers and talking points and stuff that we can bring to our clients and some awareness. And a lot of times, especially now, we're seeing where individuals are just not happy with their health insurance premiums. And they're like, I'll just self insure, for my health insurance because I don't want to pay those premiums. I get it. I had a client yesterday morning, had a great question. He was like, Justin, is there any plans out there that have, super high deductibles or maximums, $50,000 or something major, off of that as well? It's like, no, that it doesn't exist yet. But that's a good question. And we could start seeing that, to try to dramatically lower those premium costs where you can just get an insurance program or plan, pay a premium, and just have serious catastrophic coverage as well. I say not catastrophic, but serious catastrophic because that would be the 20, 30, 50,000 plus or whatever. That could be a shock claim for an individual. But where I'm going with this is in the long-term care discussion. Okay. A lot of people just say, hey, we'll prepare for long-term care and just kind of self-insure ourselves. Sounds reasonable at first, but at the same time, the length of your long-term care, and by the way, everybody's going to have a long-term care situation. You're either going to pass away or you're going to, prior to passing away for whatever reason, a lot of times you've got a chronic or critical injury or critical illness or chronic illness that is going to create a long-term care situation for you. And the real issue isn't affordability, it's really uncertainty on, how long will you need long-term care? How long are you going to need that support? The length of care is absolutely unpredictable. The costs continue to rise for long-term care. Over $100,000 in private facilities easily a year for that. That's a lot of money. And a lot of people don't have that or not prepared for that. So I think long-term care planning for everybody is something that everybody needs to consider. And maybe it's not just for you, it's maybe for your parents. You might be in your 20s and 30s or 40 years old, and you're going to have to take care of, or I say you're going to have to take care of, hopefully you'll be there to help take care of aging parents and family members when they need it. And not only you don't know how long that person or yourself would need the long-term care, you don't know what the cost is going to be. We obviously know it's going to keep on increasing, but that care that you might need might be needed sooner than you expect. Even though we're living longer lives, we're not necessarily living healthier lives, but the care can start early. You could get a critical illness or critical injury that puts you in a long-term care need situation in your 20s, 30s, 40s, 50s, So having some type of protection in that is really critical. And I try to stress this not in every show, but every couple shows on that long-term care need. And a lot of people don't realize long-term care planning can be designed and baked into life insurance. It can be standalone policies. It can be self-insured, trying to prepare for what you might need for a family member, yourself, or a loved one. Um, but let's kinda reframe this, self-insuring, you're assuming 100% of the risk. That can be a lot, for some people out there. Long-term care insurance protects assets, doesn't replace them. So, you might have to get rid of assets just to cover the cost of your long-term care. If you've got an insurance program and a strategy in place for that, then you're probably not gonna have to tap into some assets because you were prepared for that. It's gonna preserve retirement income and spousal flexibility, introduce a concept to a long-term care. We can help you with calculators on taking a look at that. You'll see what the premiums look like. You'll see how long the coverage and care would last. You may be able to access larger pools of dollars within one carrier versus another. Something else that I want to bring up in this discussion as far as long-term care planning is the stress and the disruption it provides for the loved ones that are providing the care. Okay. I think I'd mentioned this in one of the past shows. I had somebody mention to me the sandwich generation. You've got basically, you'll have this individual and they're busy taking care of their kids or their children that are growing up. They got to take care of themselves as well and their spouse. And then they have aging parents that they're having to take care of and they feel like sandwiched because they're taking care of two separate generations on that and you want to be prepared for that. It's a tough conversation to have. Some people, I'll be very candid, it's a little too late to make those planning adjustments. But for many, many other people, they've got time and the ability to put things in place for long term care planning for themselves or for their loved ones. And we'd love to talk to you about that. You can reach out to our Palmetto Life Group division on that at 877-357-5316 or visit palmettolifegroup.com. And we'd be happy to help shop some life insurance that has long-term care benefits into it or standalone policies. Believe it or not, there's also long-term care plans that you can get as a group benefit. Got a great rep with a carrier that we've been trying to work with on long-term care plans there. And make no mistake, there are long-term care plans that can be offered as an employee benefit. And that could be substantial for, depending on the size of group or the amount of employees or the amount of aging employees that might need that long-term care benefit in the future. So let us know. We'd love to visit with you about that when you have a moment. Let's talk about risk perception. Okay. A lot of people just say, hey, I'm healthy. I'm going to be fine. That isn't going to help happen to me. And understanding your risk perception is huge. I think a lot of healthy clients underestimate the risk that they could have with their health insurance needs. And every year, I have more and more clients try to get insurance when it's too late. They just for whatever reason we looked at options with them possibly in the past, and there were deadlines to meet to be able to get on that insurance, and they didn't enroll, and next thing you know, you get a phone call or a message from a person or a prospect that had called into our brokerage and needing us to look at health insurance for them, and they're like, "Hey, Justin, I'm in the hospital right now, and can you help me get into insurance?" Now, if they would have called during the open enrollment season, and we could have gotten them coverage, January 1, that's one thing. But you just can't enroll in health insurance whenever you want. It just doesn't work that way for most carriers and products that are out there. There's some products out there you can get, the following month, but there's going to be underwriting questions and some exposure you might have on those plans, or some things just won't be covered. But a lot of healthy people are healthy now, and they get an emergency. It could be a heart attack, it could be a car accident. Um, it could be a fall. They just, they weren't expecting that, and next thing I know, they're in the hospital. I saw somebody, a friend of mine online post something, 40 something $1,000 in billing. I don't know if they had insurance or not, but that can absolutely be huge medical debt that you're, obliged to cover, and it could have been managed with having a premium in place for your, protection. Um, Probability versus consequence. The odds may feel low that you're not going to have a medical situation come up, but the financial impact, God forbid that comes up, could be devastating. It could be severe. Just had a conversation with a friend a moment ago, and they were like, "Hey, I've got access to multiple options through my employer. What should I consider?" I'm like, "Well, what options do you got?" And he was like, "I've got this PPO network plan. I pay a little bit more for it. I like it, but they also have a high deductible HSA, health savings account option." I'm like, "Okay, so let's process this. If you are relatively healthy and you just get your annual physicals done and annual appointments and blood draws, and that's just kind of been the norm for the past few years, or you expect that in the future, then maybe you look at that high deductible plan, because that's going to lower your monthly cost. Okay, your premium's going to go down. You will have higher deductible or maximum limit exposure in most cases with those plans, not always, but most of the time. And you can actually put money into a war chest HSA account with a bank. And I think HSAs are going to make a comeback. I think those plans are going to, I think the premiums for those plans could be a lot less than what they are typically charged by the carriers. But if I think there's going to be some incentives, I hope so, for those HSAs, when the government will reward you for saying, "Hey, you're going to take on some of this risk off of the insurance carrier and burden it on yourself a little bit. We're going to give you something for that, for taking on that risk." So, back to that conversation I had, I think they need to not rule out maybe doing a high deductible plan. In their instance, the other spouse had access to employer-sponsored coverage through their spouse, which is great. Because that company that she works for is probably contributing to her cost of her insurance. And then the gentleman I spoke to this morning, his company he works for is contributing something to his. So might make sense to just be on separate plans through their employers. Now, where you've got to see it, one or the other, is maybe there's children. Maybe one carrier or option is better for one of the spouses versus the other, and then you just got to figure out, hey, which dependent do we put on these plans? Hey, do I put it on my employer sponsor plan, or do I put it on yours? That's just going into the weeds a little bit on having to figure out combined benefits. I will tell you, I'm seeing more often now a lot of clients that we handle employee benefits for. The spouse will consider jumping on their other spouse's coverage, and we're seeing other. I think this was a municipality or a school district. They're going to charge a fee for you adding a spouse that actually has access to other coverage through their employer. So we could see more of that, because that other spouse could be a risk factor or a shock claim in the future for them, and they're trying to prepare for that. They're allowed to do that. At least I think they are still. But that is a scenario that we're seeing more of, because sometimes some companies just can't offer the rich benefits that they would like to offer. Okay, they're handicapped, so to speak, on the amount of money they can contribute for premiums on the plan. maybe they're handicapped on the carriers that will actually shop and offer coverage. We had a lot of clients that received decline to coverage from some of the carriers. They assessed the census of the employees. They're like, no, we that's just a risk that we don't have an appetite for right now, and they make a decline, and that really hurts because now we're either stuck with a renewal for a group that could have been a pretty bad renewal, and not have other options or alternatives there. Okay, unless some of that risk changes, and the carriers have an appetite to be able to bring on that group for their employee benefits. So a lot of dynamics going on group benefits. I don't think it's been too disrupted like we've seen on the individual and Medicare side of the business, but I think that's coming. I think we'll see some changes there in the future. And again, that's just another reason to visit with and talk to us at Texas State Insurance Services. Just as a reminder, you're listening to the Mad Insurance Show, making a difference in insurance. I'm your host, Justin Holland, here on KTSA 550, and we love for our listeners to send us messages after the show, and we get a lot of calls. We'll get people that visit the website. Just said, hey, Justin, I heard you speak about this on the insurance. Can you give me some more details? I'd love to learn more. Or I've got a question here. This is an issue I've got with my current plan or coverage. Can you provide some insight? We'd love to hear from you. And you can reach us at Texas State Insurance Services by calling 210-880-5316, and that's our direct office line. You can also visit us online at txstateinsurance.com. We've got a contact form there where you can visit us. And again, another shameless plug on the Mad Insurance Show. Please go to youtube.com/at Mad Insurance Show. We'd love to help build up the following there on every show that we've got going on. We're at 15, 16 episodes so far. So slowly but surely we're building that up. And then we're putting some great clips and snips of the show online with social media and our online exposure that we've got there to just provide as much awareness as possible. So if you need to reach out to us, you can absolutely reach out to us at the Texas State Insurance Services. And remember, we've got Palmetto Life Group. Palmetto Life Group is going to help out with your life insurance, long-term care options, long-term planning, retirement, Social Security analysis, group benefits plans as far as the 401ks we can get you dialed in with. And then we added auto, home, umbrella, and commercial there as well. And the contact details for Palmetto Life Group, obviously the website, palmettolifegroup.com, or you can go to our phone number and give us a call at 877-357-5316. So we've been talking about a handful of topics here on the show, and talked about, just recently, long-term care and reframing the risk. A lot of people just say, hey, you know what? I'm going to bite the bullet, God forbid, when it happens. A lot of people just think, hey, that scenario is not going to apply or be needed for me. I get it, but I've been in this business long enough that, hey, you probably want to have some type of protection in place. I would still shop it. If you shopped insurance products years ago, I would reevaluate that. Give us a call soon or now, because a lot of times I will visit with a client or potential client, and they're like, yeah, I looked at it years ago and it was just too expensive, or I didn't like this, I didn't like that. Totally understand. But talk to us. A lot of things are changing in the insurance business, and that goes for the health insurance, that goes for the life insurance, that goes for auto and home. All facets of insurance have been making changes over the years. So just because you might not have liked what you saw a few years ago, might not be the case right now. So again, reach out to us and let us know if we can help you out with a review on that. Let's talk about the hidden costs of recovery after a critical illness. It's another topic that I wanted to bring up for today's show. What major medical does versus what it doesn't. If you've got a true health insurance plan, you're going to probably be in good shape. You're going to have all your medical situations covered, your doctor visits, except for your, copays, deductibles, and out-of-pocket exposure. But, let's talk about that out-of-pocket exposure. We're seeing anywhere from 5,000 to 8, even 10,000 on catastrophic plans. If you have a medical emergency and it's, $150,000, hospital visit or situation, if you're on a particular plan with a $10,000 maximum, that will be your ceiling. Okay, so you won't your exposure on your end on what you pay out of pocket will not exceed $10,000 in most cases, as long as you're seeing people within network and you're utilizing your plan correctly. But that could be significant exposure for those that don't have a major medical plan, or maybe you just have a critical illness policy or an accident policy that will come in and just give you a lump sum of money, to try to lower that burden down. It's not going to cover all that exposure. It's just going to really just cover a fraction a lot of times in most cases for that. So some of the things that are overlooked on having a coming down with a critical illness and not being protected is going to be loss of income, the deductible and out-of-pocket expenses that I just mentioned a minute ago, prescriptions and rehab. That's going to be expensive. If you don't have an insurance plan, a major medical plan, you're going to have some exposure there. If you have a critical illness or an accident plan on top of that, that could help cover deductibles that you're expected to pay, your out-of-pocket maximum limits, prescription, and the rehab cost. Travel, home help, everyday support. Remember, just because it's affecting you doesn't mean it's not going to affect other family members that could be having to help you and support you. They could have to travel. They might need to hire some help for themselves to take care of their kids while they're taking care of the loved one that's got a critical illness or critical injury. The everyday support, I think, is massively overlooked when a medical emergency or a long-term care need comes up, or an accident or an illness that's serious can affect somebody in their their day-to-day life, on how that can change. Why these costs hit all at once? Okay. Well, remember, if you've got that medical emergency come up, a lot of times the facility that you go to is like, hey, we're going to need to make sure we can get paid on this. Okay. And they might need a hefty copay or a deductible met. And that can eat up a person's bank account real quick, or might not have it at all to be able to cover that cost. So you need to be prepared for that. And that's why having an action plan with a major medical insurance plan and complement that with a critical illness or accident will help make sure that you're ready. God forbid, that situation comes up. How critical illness insurance works, it can just pay. Typically, it'll pay a lump sum, covers medical and non-medical needs, which is nice. You don't have to justify a medical need. It allows the clients to focus on recovery and not cash flow. So that's another facet of making sure you've got additional protection possibly in place, is you're not worried about the lost time for working. Okay. I'm seeing more and more short-term disability claims come in. Okay. For a lot of our group clients. Maybe it's just an anomaly going on. Maybe it's because we've got more clients now and we're seeing more, but I'm seeing more short-term disability claims come in than we have in the past. Not so much long-term care disability or long-term disability claims, although we do see them a few times a year. It just seems like the short term is going to be is more prominent, or I wouldn't say popular, but more frequent that we see with our small group plans. And I will tell you, just to having those short-term disability plans, it can really help out with that income loss. And a lot of companies do not offer short-term or long-term disability. Many of them offer critical illness and critical injury, but again, those are just going to be the lump sums. And having a good advisor, having a good benefits counselor to review your plans is going to help, not just the company, but it's going to help those valued and trusted employees really navigate and protect themselves, but also within budget. I will see people just get every insurance product that they can, and it just absolutely eats into their check. And in some cases, they might not need all those coverage and plans to protect them with. So, um, just make sure you're visiting and getting hands on with an advisor, with a benefits broker like ourselves, and just visiting every year. And don't neglect and don't kind of just write off or go through the motions if you're going through an open enrollment with your employer on your insurance benefits. Really dig into that. I see a lot of people, okay, just, I'm going to decline. I don't need it. Or I'm not going to decline, but I just want this plan, same as usual, figure it out. And they just don't take it that seriously until the emergency comes up and I get a call back. Hey, what did I have again? I had something come up. Can you tell me what my benefit is? Make sure you're really in tune with what the health insurance and benefits that you are provided from your employer. And if you're not provided some, it might be a reason to look at that outside of your employment and get protected there. I'll give you a perfect example. Life insurance. You see a lot of life insurance, it's covered by an employer. You'll see anywhere from, 10,000, maybe $25,000 on employer sponsored life insurance. Some of those employers like to even make that higher, but they're restricted by the carriers on how much they can do for a guaranteed issue amount or an employer sponsored life insurance policy. But, when you look at those amounts, whether it be 10 or 20,000, half of that is gonna get us in the dirt, prepare for final expenses, and, unless you're gonna have an elaborate funeral or anything, maybe it costs more than that, but a lot of times, that's all it's gonna do, and maybe pick up some odds and ends. A lot of our clients that we have employee benefits with, they need more than that 20,000 or 50,000 or even 100 plus $1,000 in life insurance because 'cause they've got a $250,000 mortgage. Maybe they've got children that are young that are going to need to be taken care of financially, on top of the mortgage, on top of the bills. Maybe it's just a one earner of income in the family that will be devastating. So we have many of our employee benefits clients reach out to us and we'll do additional life insurance quotes outside of their employee benefit offering and see if that is needed or complements the protection and peace of mind that they need with what they have in place. And a lot of times, in most cases, it's not portable. There are some carriers where you can take those benefits if you decide to leave that employer with you, but in most cases, the cost is extremely high and increases quite a bit. So having a plan of taking advantage of the benefits that you have with your employer, it might make sense to get some other benefits applied for or in place outside of that. And then you don't have to worry about portability. God forbid you got to switch jobs or anything or change employers, which is the case for a lot of people. You have the peace of mind of having, hey, my life insurance or my long term care plans in place. It wasn't tied to an employer sponsored plan. So that's something that I'm glad I'm bringing up on the show to just let people know that not necessarily, even if you have an employer that doesn't offer benefits, obviously that is an absolute reason to visit with us and look at individual options outside of what isn't being provided to begin with. And if you're a small group, or you're an employer, you're wanting to offer a small benefits offering, medium or even large, let us know. We'd love to visit with you and size up what you might already have right now. It's a no nonsense, no cost obligation. We try to help out as many people as we can, and we've been pretty successful on tackling those renewals and looking at long term strategies. A lot of times it's just people just focused on that one renewal. Well, we try to put things in place that are going to make sure that we aren't getting those shock renewals, like what we saw this past year for employee benefits. I mean, I mentioned this before in the prior show. I can count on one hand the amount of clients that we had with either zero or rate passes or single digit increases. Everybody else was double digits. We were seeing health insurance and benefits increases for employer sponsored plans, 10, 20, 50, 100 plus percent. Okay. That was, we hadn't seen that before. This is the first year where we ever seen anything like that. And then we had on top of that, the Affordable Care Act expanded subsidies going away. Yeah, I had a call from a lady earlier today, or I'm sorry, today, but earlier this week. And she was like, Justin, my subsidy's going away. Well, no, not necessarily. If you're at a particular income bracket, it could be going away. But if you're in this bracket, you're going to be fine. We are years over, well over a decade into the Affordable Care Act, and still people, and I'm sure it's millions of people, just don't understand the dynamic of individual health insurance. Why does individual health insurance matter on an employee benefits plan? Because a lot of times it's just too expensive to put a employee spouse, their children, one or the other, or both onto their employee health insurance plan. A lot of people can get away and not get away, but they can enroll on the dental and vision and the ancillary benefits, and it's reasonable and affordable for them. But when it comes to health insurance, it can be very expensive to add a spouse or child or both on the plan. And why that's important to know is because we can shop individual health insurance for the other family members. Give you a perfect example. I like using this example from last year. I was with a auto dealership client of ours, and one of the employees was like, "Hey, love the premium, Justin. This is great. This is going to work out fine for me, but I can't afford the extra $1,100 a month to add my wife and kids." I'm like, "Okay, I totally understand. Let's evaluate this." And we shopped the plan. I found out what the adjusted gross income is for the family size, and basically the tax dependent dynamic. And we were able to allow him to stay on his company plan with that auto dealership for let's call it, I think it was a little over $160 a month. He wanted a higher tier plan that they offered. And we were able to get the spouse and the children on another plan for another $100. I think it might have even been less than 100 than we initially quoted. And then he wanted to do a gold plan, so it was like 150. Okay, not the same coverage, but very similar to it, and had copays and deductible access. The doctors were in network for his wife and children on that plan, and we saved them, let's call it, $700 a month, 7,000 plus dollars a year, almost 8,000. That's significant. And a lot of people that I see, and it breaks my heart because they'll say, "Hey, if I can't afford this insurance through my employer, then and I'm not going to get it. If I can't get my family on it, I'm not going to get the coverage or the insurance." And that's huge exposure that they're going to take on. And we want to make sure that we can help evaluate that and say, "Hey, that's not the case. We can actually have you get on this employer sponsored plan. Your employer's contributing to you. They're helping take care of that premium or offsetting and subsidizing that cost to you. And here's the alternative for your family members, for your loved ones, so we can make sure everybody." And what that does is that keeps everybody insured. That keeps a healthy enrollment for the employee benefits plan because you want to have enrollment, you want to have participation. That's what the carriers want, and a healthy participation too at that. But the more people you have in the plan, the more the risk can spread. Okay, and you can offset those claims that come in that are higher than usual. But we've also got the rest of the family members covered and protected as well. That family could have gone and have gone without coverage, and a medical emergency comes up and they're devastated, and it's heartbreaking. So that's a really good scenario that I like to bring up multiple times. I try not on every show, but on every other show or every couple shows to bring up that scenario. So we've talked about, trying to say, "Hey, it's not going to happen to me. I'll self-insure." You know, I don't care about the hidden costs. As far as understanding the risk perception, it's critical for our audience and everybody to know that everybody's got risk out there. You just need to assess it, and we'd love to help you look at that risk and take a look at what we can do to help you. My name's Justin Holland. You're listening to the Mad Insurance Show, making a difference in insurance. Can't thank you enough for joining us today online. You might be watching us on our YouTube channel, youtube.com /at Mad Insurance Show, or you could be listening to us on the radio on a Saturday evening running around San Antonio or South Texas. I can't thank you enough for tuning in right now. It's been nice because I actually had lunch with a client and a carrier rep this week, and they actually heard our show, and that's been cool. Having individuals reach out to me and say, "Hey, Justin, I heard you on the show," and I'm like, "Hey, did I sound okay? Was I talking into circles?" And I've gotten some good feedback so far. I'm sure some of these shows I can bore some people regarding insurance, but we created the Mad Insurance Show to just talk about everything insurance. Okay, we've talked about health insurance, we talk about life insurance, employee benefits, auto and home, umbrella, commercial. Next week, we're going to have a special guest on PEOs and how those dial in with employee benefits and payroll. So we're going to look at a lot of different aspects. Last week we had Scan Health. I had JJ Ortiz over. It was a great visit with JJ. Love Scan Health. I was actually at an event, Gonzaga Medical Group, last night over off of Goliad at a new facility, gorgeous facility that they had, and was able to visit with some of our carrier reps over there. Scan was there. They're in network with Gonzaga Medical Group. So Gonzaga Medical Group, thank you so much for having us out to that beautiful facility, first class, cutting edge, and really excited to see the growth that the Gonzaga is doing with their medical group here in the San Antonio area. And they've got a great team over there. Ileana has always been gracious to us with Texas State Insurance Services. So I'm giving them a shameless plug on that as well. But the Mad Insurance Show is backed by Texas State Insurance Services and Palmetto Life Group. Texas State Insurance Services is our division for individual health insurance, Medicare plans for seniors, employee benefits, and even travel, dental, vision, and ancillary benefits out there. You can reach out to us at Texas State Insurance Services by calling 210-880-5316. You can also visit us online and fill out our contact form at txstateinsurance.com. Palmetto Life Group handles our life insurance, long-term care planning, retirement, Social Security analysis, as well as auto, home, and commercial and umbrella policies. We'd love to visit with you if you need any help there and just keep your current broker agent honest. Maybe you don't have a broker agent and you need one. We'd love to help you out there. 877-357-5316 or go to palmettolifegroup.com. So it's been a good show. Hopefully they'll edit out some of my coughing spells that I've had. I've had some allergies this week. So if I sound a little under the weather, I apologize, everybody. But I'm going to persevere and we're going to get through the rest of this show. But we've talked about a handful of topics. And we talked about some serious updates and news in the health insurance industry. Um, I guess I probably need to bring up the great healthcare plan that we discussed, and I was actually a little critical of last week's show because I just don't see any help on the way as far as helping out with affordable insurance for our clients or the offering that we can provide them. It's a challenging time for our industry. And I have to explain that to every client, it seems. I have to let them know right off the bat, hey, we're here for you. We want to provide you every solution that you have access to. We're just limited. It's a really tough time. And this goes, excuse me, for individual health insurance plans, like we saw the disruption with the Affordable Care Act and those expanded tax credits not being renewed or extended, and for that middle class population that's just getting absolutely destroyed financially with the health insurance premiums. And the other problem is a lot of people just didn't enroll in individual health insurance because of the cost, or they were losing their extended tax credit. Now, there's still people, again, I need to reiterate this again in the show. There's still people qualifying for lower cost coverage, but there's a segment of the population, big segment, millions, that were finally getting some assistance for lower cost coverage for themselves, for their family members, and they lost that. And they had to make a tough decision with us. And we had plenty of people calling us on this over this past fall before the deadline ended. Some people just said, hey, I can't afford this, and we're not going to renew. And they're going without coverage. Some individuals were healthy enough for us to look at alternative plans and coverage that they could pass with medical underwriting. Wasn't health insurance, it was health coverage. And then you've got some people that are like, "Hey, I'm gonna keep this plan as long as I can, Justin, until I can't afford it." So, um, a lot of people are hurting right now on their health insurance cost, and I'm trying to be optimistic. There's a lot of craziness going on in the world right now. There's a lot of disruption, a lot of noise, and I'm hoping we stick the landing. I'm an optimist. I think we can get some help. We just need some really smart people to put things together. I think there's going to be some tough decisions to make for not just our legislatures, but personally for everybody. And hopefully, we're prepared for those changes as they engage the health insurance industry. But individual health insurance, no question, was disrupted significantly this past fall. Medicare, we saw disruptions in Medicare where carriers were absolutely just pulling out of networks or markets altogether. Plans were just going away off of that. Benefits were being retracted, although some carriers, excuse me, were adding benefits and that they might have taken away prior, but some markets got hit worse than others around the country as far as losing plans or having a disruption in their Medicare insurance. And sometimes those they might have had a benefit that went away, or a lot of times, we had a handful of them. They were just flat out losing their plan. We had to scramble to try to notify them and let them know. We've got clients that have been clients of ours for years, and they're just on autopilot. Even though we send out a notice and we try to engage them, they just kind of blow us off. And I get it. They just think everything's good until we get a phone call come January and say, "Hey, Justin, I found out my plan went away. What can I do to fix this?" "Hey, Justin, I'm paying." The biggest one right now is I'm getting a call almost daily from clients is even though we revisited this and we looked at the prescription drug review, they've got a deductible to meet. And a lot of these plans that they are on for Medicare, they're taking tier level 3 and higher medications. So they're going to need to meet that deductible the first couple months of the plan year. And they're going to spend 3, 5, $600 a month on that plan until that deductible's met. So that was a big disruption there as well. And then the employee benefits side of the industry, just record breaking increases from every carrier. Some carriers were tougher than others, and some were not. But no question, a challenging time of year for us in this business and industry. And we appreciate your patience with us as agent brokers, myself included, with Texas State Insurance Services and Palmetto Life Group. Um, we looked at a spreadsheet. I probably talked to 800 plus people in that fourth quarter, which is crazy and unheard of. But we wanted to have a pulse on every single prospect, existing client, and even clients that we've lost over the years, in trying to make sure we weather the storm that we're facing in the insurance business. So if you want a dedicated agent or broker, please reach out to us. I can't thank you enough for joining us on the Mad Insurance Show, Making a Difference in Insurance. I am your host, Justin Holland, with Texas State Insurance Services, where we can help out with individual health, Medicare, employee benefits as well. And our phone number is 210-880-5316, or you can visit us online at txstateinsurance.com. Don't forget about our other brokerage, Palmetto Life Group, where we can help out with life insurance, retirement, Social Security analysis, as well as long-term care planning, or life and long-term care planning, as well as the auto, home, umbrella, and commercial assistance that we can provide you. We're real excited that we launched that. And that phone number is 877-357-5316, or you can visit us at palmettolifegroup.com. While I wrap up the show, I'm just going to remind everybody we've got 4 locations we can meet you at in San Antonio and the surrounding area. We have a location also in McAllen servicing the Rio Grande Valley. So I'm down there often. We're very excited about the growth that we're getting in South Texas, and we'd love to be your agent. We'd love to have you size up our organization and see how we can help you out individually, uh, family members, loved ones with their insurance needs, or even your small, medium, and large business. We're here to help you and analyze every scenario that you have access to with your coverage and care. And we will probably have an update next week on the monthly workshops that we're going to bring back for Social Security analysis, Medicare 101s. We're looking at also bringing in a workshop on how to basically read your medical statements and your bills and your explanation of benefits or your deck pages on your insurance. So I'm real excited. Be on the lookout for that update. And thank you again, everybody. We'll talk to you again next week. Take care.